Good afternoon, students. We welcome you all to this fortnight program organized by Board of Studies Academic of ICAI for CA final students appearing in November 2026 examinations. In this program, we would be covering for each day one paper. So today being the first session in this program, we would be covering paper 1, financial reporting. The session would be taken by CA Alogar, the subject faculty, and by CA Shalpa Agarwal, our BOS faculty. Both the faculties have joined with us. We welcome you, Alok sir and Shalpa ma'am, for this session. Students, the faculties would be discussing on certain selective and important topics and aspects from this paper. The faculties would also address the queries which you have already submitted to us on this paper. So please take note of all the valuable insights and points which our faculties would be sharing with you during this session. You will find them very useful for your examination preparation. So with this, I hand over the session to our Shalpa ma'am. Over to you, ma'am.
Thank you, ma'am. Welcome, sir. And students, welcome everybody. And for this session, let us just, let me brief how we are going to proceed this session. And after that, I'll hand over to sir. Okay, so students, first of all, we'll be discussing the important topics. We have divided the entire syllabus into 3 categories. Okay, first category is your category A, where the standards from which mostly the questions appear in every examination. Then the second category from which the questions appear alternatively or very frequently. And then the third, where the frequency is less in comparison to other 2 categories. After that, we'll be covering how you should present your answer, what are the amendments, how you present your answers, what are the examination tips, what strategies to be followed, and also what important do's and don'ts. Besides that, if time permits, we'll also share some commonly committed errors which students do in their examination, and that has been observed and noticed, and that we'll share in case that time permits. So before that, beginning with the Alok sir, and he'll be discussing the important points and what are the important provisions within that standards which are tested in your examination. Sir, over to you, sir. Okay, it appears some network issues, sir, from your side. Students, meanwhile, sir is connected with us. Let me just take it forward. First of all, I would like to inform you the amendments. The amendments which are applicable for November 2026 examination, because many students who have submitted their queries beforehand, they have talked about amendments. So amendments we would like to share is that, just a minute, student. So students, amendments, there are 2 amendments which was released in 2025, and they are applicable for your financial reporting paper from your May 26 examination. So for May 26 examination, in the RTP relevant for May 26, we have summarized those 2 amendments and have given there. The same amendment is applicable for November 2026 examination. Besides the amendments which are there, amendments are basically in Ind AS 21 regarding lack of exchangeability. Your Ind AS 1, where one carve out was there for breach of contract, because of which classification of item into from non-current to current was there. That has been waived off or removed. And besides that, there are 2 more amendments. One is on Ind AS 7, supplier finance arrangement, and is on Ind AS 12. Alok sir has joined us and he'll brief you the amendments, sir. So sir, we have discussed with students. Students wanted first the amendments. So can we have first the amendments, sir? Or otherwise,
Sure,
if you want, you can take it up. You can take it up with your the way you want to proceed, sir.
Yeah. So am I audible now?
Yes, sir.
Yeah, good afternoon, students, and good afternoon, ma'am, and sorry for the glitch. So let's begin with the first paper, financial reporting, and I would say thanks to ICAI Board of Studies for organizing this wonderful seminar for the students. And students, today we are not delving deep into the nitty-gritties of the concepts. We will be talking about what is relevant for the exam, how we need to prepare for the exam, what should be our strategy, and of course, we will be touching on the few important aspects. Definitely, I'll take you through on the amendments which was notified by MCA on 7th May 2025 and 13th August 2025. These are the two MCA notification in terms of amendments which are concerned, which is relevant for your examination. Okay. So during the course of my interaction, I will take you through with those amendments. So to begin with, and of course, we will be going to talk about important topics. We'll talk about the challenging topics. We'll talk about where you need to, push your muscles right into the financial reporting. The time management is, of course, a very important aspect. What are the commonly found errors? What are the commonly mistakes which is committed by the students? What should be the strategy of revision? So myself and Shilpa ma'am will cover these all aspects in the next 2 hours. Talking about the weightage, for every student, the most important aspect is which chapter, which standard covers what amount of marks. I think that is very, very, very important. When I was student, so I qualified in 2007, and when I was student, the first question which was there in my mind, which chapter contains how many marks? That is weightage. So if you look at the first section, right, which is introduction to the general purpose financial statement, which is conceptual framework for financial reporting, this section 1 covers 10 to 15% of the weightage, right? So if I talk about your financial reporting paper, there are 6 questions of 14 marks each. And out of the 6 questions, the first question is compulsory. And out of the remaining 5 questions, you have to attempt 4 questions. So in totality, 84 marks paper is on the detailed question plus 30 marks paper is on the MCQs. Okay. So your total paper is 114 marks. So out of 114 marks, 10 to 15% is out of section 1. And generally in conceptual framework for financial reporting, a theoretical question may asked. Okay. Then talking about again this section 1. So there is an application of Ind AS with general purpose financial statement which covers Ind AS 1, which covers, Ind AS 8, Ind AS and the Ind AS 7, Ind AS 10. So basically these income statement, presentation of financial statement. So these sections also cover this. Section 2 covers, so sorry, section 2 is on income statement, which is Ind AS 115, right? So Ind AS 115 is a very detailed standard, and this 115 covers almost 7 to 12 marks of question, 7 to 11 to 12 marks of question. And this 115 is very important from the exam perspective as well as the real life perspective. Then we have Ind AS on assets and liabilities of the financial statement, which is covered under section 3. And this covers 15 to 25% of the paper. Means it covers almost 17 to 18 marks to almost 26, 27 marks of the paper, which includes Ind AS 2 on inventories, Ind AS 16 on property, plant and equipment, 23 on the borrowing cost, 36 on impairment of assets, 38 on intangible asset, 40 on investment property, 105 on non-current asset held for sale and discontinued operations, and 116 on leases, right? And Ind AS 19 is on employee benefits, right? And 37 is on the provisions, contingent liability and contingent assets. So these are covered under section 3, which covers almost 25 to 30 marks of the paper. Then in the section 4, you have the Ind AS on the items impacting the financial statement, right? So for example, Ind AS 12, Ind AS 21, so income taxes and the foreign exchange standards. Then you have Ind AS on disclosures like related party disclosure, earnings per share, segment reporting, which is operating segments in terms of Ind AS, right? Other Ind AS, for example, government grants, share-based payment, agriculture. So this section 4 covers almost 15 to 20% marks of the paper, right? Then, so one of the most complex and complicated, right, which you can make it simpler and easier by your practice. Okay. And this is no one else than financial instruments. Okay. So you have the 3 standards on the financial instruments. Ind AS 32, which talks about presentation of the financial instrument. Then Ind AS 109, which covers your measurement, classification, impairment, modification, derecognition of the financial instruments. So Ind AS 107 covers the disclosure of the financial instrument. And this financial instruments, these three standards, this section number 5 covers almost 12 to 16 marks of the paper, right? And generally in every paper you can see the question from the financial instrument. Then we have the group accounting in section number 6, where the 12 to almost 22 marks question may be asked, right? And group accounting includes your 6 standards. Ind AS 27 on separate financial statement, Ind AS 28 on the accounting for investment in associates and joint ventures, then Ind AS 103 on business combination, Ind AS 110 on consolidation of subsidiaries, Ind AS 111 on joint ventures. So these are the 5-6 standard which covers 10 to 20% marks of the paper, right? Then we have section number 7, where almost 7 to 11 marks of the paper may be covered, and which covers your Ind AS 101, first time adoption of the financial state of the Indian accounting standard, and the analysis of the financial statements. So this is your weightage and coverage as far as exam is concerned. Shilpa ma'am, would you like to add anything here?
Yes, sir.
Yeah.
In this, I would like to just student, one more section is there, which is section 8, which covers your professional and ethical duties of the chartered accountants and your accounting and technology. 5 marks weightage in general is there. One of the topics, see, students, if you see in section 7 and section 8, there are 2 topics. So alternatively, it is tested. One, if it is 101 is tested, then definitely your analysis of financial statement won't be tested there. So you have a very good opportunity to check what has been tested in the previous examination. Most probably the another topic falling in that section will be tested in this examination. That is one way of strategy to build based on your trend analysis, which you can do it on your own based on your what the questions are being appeared in the past examination. Also, the section wise weightage which sir have shared, from that you will find there are certain sections which carry only single standard, like your section 2 Ind AS 115. Only one standard is there, so for sure the question is going to be asked from that particular standard. And for in case you prepare it thoroughly, so questions of almost 7 marks will be tested on that particular standard. Similarly, your financial instrument is the only standard. There are 3 standards on financial instrument, but the topic financial instrument is the only topic which is there in that particular section. So one question in descriptive test manner of part 2, that is your question paper. One question of 10 marks is for sure is going to be asked on financial instrument. So there are certain, what I wanted to convey is that there are certain sections which have only single standard, so students have less the higher probability is that the questions will definitely be asked on that topic. So prepare those standards in the beginning for revision purpose. We are assuming that you have already completed your preparation and you are in the revision phase. So please revise these standards on priority, because once you prepare these standards or these topics, you'll be confident that you have covered almost this mark for your examination purpose also. So for 14 marks, compulsory question is on consolidation, and besides that, 4 to 6 marks is asked in your MCQ part. So 20 marks from consolidation, 14 marks from your financial instrument, and 7 marks from your 115. So in total, it comes almost 30 to 35 marks. So by preparing 3 topics, you can cover 35 marks for your examination. I agree, these 3 topics are big. It is in itself one volume of your material, but still by preparing these, you'll be confident that you have prepared for this much marks. Then you can see the trend analysis and you can weight it, sir. That's what I wanted to say. Over to you, sir.
Yeah, sure. Yes. So students, today we are going to discuss on some important topics about Ind AS 110 and business combination. So these 2 standards, these 2 topics are interrelated. And what's the difference and what's the interrelation between business combination and the consolidation? Business combination is an acquisition date standard and the consolidation is a reporting date topic, right? It's exactly the same difference between your birth date and birth day, right? The day on which you got birth is business combination, and you celebrate your birthday every year. That is a consolidation. So consolidation is a reporting date standard and business combination is a acquisition date standard. So these two topics are covered in the group accounting, as Shilpa ma'am has suggested. As she has told that 14 marks paper is from the group accounting, and of course 5 to 6 marks question may be asked in the MCQ, right? So then Ind AS 109 financial instrument will touch base, 115 revenue from contract with the customer will touch base quickly, and 102 share based payment, 116 leases, and the other topics. Okay. So before that, you wanted to understand about some amendments. So let me cover some amendments, and there were 4 amendments. So let me cover this word file, but largely I will discuss this in a very layman language, that what are the amendments, okay, so that you will be able to understand what are the amendments. So there were 4 amendments which came in the year 20.
Sir,
Yes.
sir, zoom, please zoom the screen so students, it will be visibility will be higher.
Yes. Is that visible now, ma'am?
Sir, can increase move further. You can
Okay.
increase further, sir.
Is it visible now,
Yeah.
ma'am?
Yes, sir.
Yes.
Yes, sir.
So students, there are 4 amendments which came in 2025, wide MCA notification dated 7th May 2025 and 13th August 2025, right? These were the 2 amendments. And what are these 2 amendments covers? So 7th May 2025 amendments, it covers the amendment under Ind AS 21. Under Ind AS 21, it talks about the effect of changes in the foreign exchange rates. And what is a foreign exchange rates? For example, you know that the INR versus dollar rate, right? So today the dollar is trading at 96 rupee almost, okay? And in the last year, we have a currency depreciation of 11%, means the dollar is increased by 11% in comparison to INR. INR is depreciated by 11%, and if you see the financial statement of aviation companies, so they have recorded a huge losses in their P&L due to the increase in the foreign exchange rates. But what happens if you are talking about a currency of Nepal? So you must be knowing the price is 1 Indian rupee is equal to 1.6 Nepali rupee. Okay. So those kind of currency where there is a lack of exchangeability, right? Means nobody is trading in Nepali rupiah. Okay. So everyone wants to have US dollar in their country. Okay. So US dollar, Great Britain pound. Okay. So euro, Japanese yen, Chinese yuan, these are the currencies which have a exchangeability. But what happens if a currency does not have a exchangeability? Then how will you find the spot rate? Okay. For example, if you have a subsidiary in Nepal and that Nepali subsidiary is into the Nepali rupiah and this currency is not exchangeable, okay, this currency is not tradable, then how will you find the spot rate? Okay. So friends, this amendment wide MCA notification dated 7th May 2025, this amendment talks about if a currency lacks exchangeability, then this amendment addresses that how will you determine the spot rate of that currency. Okay, आप उसकी spot rate को कैसे determine करेंगे? Okay, when the currency is not tradable, then what are the enhanced disclosure requirement? So if the question will come as a theoretical question from this amendment, right? So there are very less chances about the practical applicability or practicality in terms of this amendment is concerned. So you need to read this amendment from the theoretical perspective. This amendment defines what is the definition of exchangeability, right? When you will say that this currency is exchangeable or this currency is not exchangeable, probably you will say that, sir, the Nepali rupiah is equal to 1.6 of Indian rupee. So is it exchangeable? So you need to look at whether that currency is trading at the stock exchange or not. Stock exchange means the currency exchange. For example, let me talk about a share BCG, right? So there was a stock which is known as a BCG, and that stock was suspended for trading for 6 months. It was listed on the stock exchange, but no trading was happening. Means that stock was not tradable. Likewise, if the currency is not tradable, it will be considered as not exchangeable, right? So these kind of amendments was there. So this amendment addresses the meaning of exchangeability, how to determine the spot rate, what is a two-step approach. So I would request each and every student to go through with these amendments, right, to have a good theoretical kind of view in the examination. Okay, so that was one. Now coming to the important amendment, which came on 7th of August, right? 13th of August. So it was 7th May, then 13th of August. What is this 13th of August amendment? Two amendments are very, very important. Number one, the classification of liabilities as current or non-current, right? You know that if a liability on the reporting date, for example, if a company has taken a loan and that loan has to be payable after 12 months from the reporting date, it has to be classified as non-current. But if it has to be payable within 12 months from the reporting date, it has to be classified as current. The para number 66 of Ind AS 1, and of course you are not required to remember all those para. You need to remember the concepts. Okay. Since I am teaching with so many years, so I remember the para, but you are not required. So this Ind AS 1 defines what is current liability, what is non-current liability. It also says that if there is unconditional right to defer the settlement beyond 12 months, if there is unconditional right to defer the settlement beyond 12 months, that will be considered as a non-current liability. Friends, on 13th August, this unconditional word has been removed. And now it says that if there is a right to defer settlement beyond 12 months, then it will be considered as non-current. Otherwise, it will be considered as current. And the amendment says that you have to look on the reporting date where the liability is current or the liability is non-current. How this amendment is impacting us, so let me tell you. In Ind AS 1 and Ind AS 10, we have to taken a carve out. And what was the carve out? So IFRS says that if a loan which was non-current on the reporting date and it becomes current because the company has defaulted in the covenants. Covenants means terms and condition of the loan. The company has made some default. Due to the default, non-current liability, this loan becomes current liability. Okay. Why? Because it is repayable on demand now. So after reporting date, but before approval of the financial statement, the company has talked to the bank and bank agreed, okay, I will not demand you the payment, right? In the 12 months from the reporting date. So I will go by the old terms and I will not demand the payment right now. So now in Ind AS 10 and Ind AS 1, we have taken a carve out and we said, if the company will make good this default in the loan covenant, we will consider this liability as a non-current liability and we consider this event as an adjusting event. But effective from 1st April 2026, our accounting treatment has become in line with IFRS accounting treatment. And we said, if a company's liability was non-current in nature, but on the reporting date, the company has made some default of the loan agreement and due to which the loan become repayable on demand. Okay. So it means on 31st March, the loan become a current liability. So standard says that you have to see the substance, you have to see the nature on the reporting date, not beyond the reporting date. So on the reporting date, it become a current liability. And even though after the reporting date, the company has made good this arrangement, it does not matter. It does not change the classification and the entity, the company will continue to show this liability as a current liability. This is the major change. Okay. This is the major change in the 13th August 2025 notification. So what is the change? Change number one, the word unconditional right to defer settlement, unconditional word has been removed. Number two, so now this carve out has also been removed, right? So you have to see the nature of the loan on the reporting date, not beyond the reporting date. Okay. So that is one of the most important amendment in this Ind AS 1 and Ind AS 10 in 13th August 2025. Then the next one is supplier finance arrangement. Of course, a lot of detail are there in this word file. I'm not reading all those details, right? So I am just giving you what is the crux of the amendment. Then friends, this amendment was applicable from the financial year beginning from 1st April 2026. This amendment was not applicable for the financial year 25-26. This amendment was applicable for the financial year beginning from 26-27. Okay. So then what is the next kind of important amendment? Supplier finance arrangement. What is meant by supplier finance arrangement? What is the meaning of supplier finance arrangement? Supplier finance arrangement is an arrangement when there is a three parties, right? And this is a new concept. This concept came into Indian accounting standard on 13th of August. But this issue This culture was always there since last 20-30 years for the Indian companies. What is a supplier finance arrangement? In supplier finance arrangement, there is a company, there is a supplier, and there is a banker. Okay. For example, a company has purchased goods worth rupees 10,000 from ABC supplier. Now, the payment term is 60 days. The supplier is not agreeing to the payment term. The supplier is saying, I need the payment immediately. And this supplier has a monopoly in the market. So this is the only supplier who is supplying the raw material to the company. Now company don't have money. Supplier need the money urgently. So now the company has entered into a tripartite agreement with a banker. The company told banker, can you please pay some money to my supplier, right? So supplier, company and the banker, they have a tripartite agreement where banker told that yes, I will pay 10,000 rupees to the supplier immediately whenever he will produce the bills to me. Okay. This is known as a supplier finance arrangement. Okay. Where the finance provider, which is bank, pays the entity supplier on behalf of the entity, and the entity repay the finance provider on or before the date which was agreed. Okay. Is that clear? So banker, supplier and the entity. These three parties are important for entering into a supplier finance arrangement. Now the point is, before this amendment, company used to play with their presentation. For example, the company has 10,000 rupees of sundry creditors, but now the company has paid the sundry creditors through the banker. Okay. So the point is, this 10,000 rupees of sundry creditors has to be shown as a sundry creditors in the balance sheet, or it has to be shown as a loan from the bank, right? Few companies were showing as a creditor, trade payable. Few companies were showing as a loan. So there was varied practices. So after this amendment, it says that the payment to the supplier has already been done by the banker. Okay. And of course, if the banker will charge interest, the banker will charge interest from the company. So now who will demand the payment? Whether creditor will demand the payment or banker will demand the payment. So banker will demand the payment. So now the trade payable has been converted into the bank borrowings. So it has to be shown as a bank loan. So that is the amendment. Okay. That is the amendment which came. And this amendment came in Ind AS 107 and Ind AS 7 statement of cash flows, right? So now this amendment says that you have to provide some qualitative information and the quantitative information as a disclosure, right? You have to give some disclosure as a qualitative information and the quantitative information. What are the disclosure? Let me tell you in a summarized manner. Okay. So qualitative information means what are the terms and condition, like extended payment terms. For example, the company has entered into the purchase order of 80 days, 120 days, 150 days. Okay. So what are the terms and condition? Okay. What are the securities and guarantees which are provided? So these are the qualitative information which is required to be disclosed in case of supplier finance arrangement in the notes to accounts. Then you have to give some quantitative information. What is the quantitative information? For example, the company has a trade payable of 1,000 crores, but the company banker and the vendor has entered into the supplier finance arrangement only for the 400 crores. So you have to provide a disclosure in the notes to accounts. What are the carrying amount of the liabilities under supplier finance arrangement? So out of 1,000 crore, only 400 crore liabilities are under supplier finance arrangement. So you have to disclose carrying amount of the liabilities under supplier finance arrangement. Number two, you have to disclose amount for which suppliers have already been paid by the finance providers. For example, 400 crore liabilities was under supplier finance arrangement, but to the extent of what amount of liabilities the banker has already made the payments. Okay, that you need to disclose. Then you are also required to disclose what are the line items in the balance sheet which are subject to supplier finance arrangement. For example, other financial liability, trade payable, etc. Okay. Then you have to give the range of due dates, right, for the liabilities under supplier finance arrangement. Range of due dates means for every purchase order there is a due date, 0 to 60 days, 60 to 120 days. So you have to give the range of due dates for the liabilities under supplier finance arrangement. And you are also required to give the range of due dates for those liabilities which are not under supplier finance arrangement. For example, if I have entered into a contract with my vendor that I'll pay you after a week, then why he will enter into a supplier finance arrangement? Okay. But if I will enter with a vendor that I'll pay you after 120 days, then probably he will enter into a supplier finance arrangement so that he will get the money, get the working capital immediately. Okay. So these are kind of disclosure which are required as per Ind AS 7 and as per Ind AS 107 wide amendment dated 13th August 2025. So friends, these were the amendments. So these two amendments are very, very important from the practical perspective also. This treatment of the classification of the liability. Number 2, the supplier finance arrangement. Then the third amendment on 13th August is on Ind AS 12, income taxes. And this amendment is again theoretical in nature, which talks about the Pillar 2 legislation and Pillar 2 income taxes. Okay. So this amendment talks about the OECD, right? OECD guidelines. It says that Pillar 2 legislation includes Pillar 2 model rules as per OECD, including tax laws that implements qualified domestic minimum top-up taxes described in those rules. Very technical kind of amendment, I would say. Very theoretical amendment. And I request students to just go through very small amendment, not very large amendment, very small amendment. I request students to go through with this theoretical amendment, right? So if a question will come, probably it will come as a theoretical in nature. Okay. So these were the 4 amendments which came on 7th May and 13th of August. Now I'm moving to my PPT. Shilpa ma'am, should we discuss any question first, or I should cover the topics first?
So students generally inquired about the amendments that you have very well explained to them. So we can move to the PPT. Students, I just want to add one thing. For these 2 amendments, we have added certain questions in the RTP. Basically on Ind AS 1 and on your Ind AS 21, we have added 2 questions in the RTP so that you can appreciate these amendments in a practical form also. So you can also understand these amendments to those 2 questions also. Okay. Sir, over to you. You can move to PPT, sir.
Sure, ma'am. I hope my PPT is visible. My PPT is visible, ma'am? Okay.
Yes, sir.
Yes. So now talking about the group accounting, right? So in the group accounting, one of the most important topic is step acquisition and accounting of step acquisition, right? So what is a step acquisition? Quickly covering. So probably, let's say a company has a 20% interest in a company. A company has acquired 20% stake in a company. And now company is acquiring 35% stake in that company. Okay. So by acquiring 35% stake, the company will have 55% stake in that company and the company will have control, right? So this step acquisition concept is covered under Ind AS 103, which says that in case of step acquisition, the time when the company is having a control, the time when the company is acquiring control, it is known as acquisition date. And on the acquisition date, for calculating goodwill or gain on bargain purchase, you have to fair value the previously acquired interest plus, of course, you are acquiring 35% stake at today's fair value, right? So previously acquired interest has to be remeasured at fair value plus today's fair value of the acquired stake minus net identifiable assets plus NCI. That will give you the goodwill or gain on bargain purchase. What is important here? 2 aspects are important here. Aspect number 1, in case of step acquisition, you have to always remeasure and fair value the previously acquired interest. At times, what students does, at times students pick the cost of the previously acquired interest while calculating the goodwill or capital reserve. Capital reserve means gain or bargain purchase on the date of acquisition. So that is number 1. Number 2, so when you remeasure your previously acquired stake, for example, 20% stake was acquired at 500 rupees. Now it becomes 700 rupees, the fair value of the 20% stake. So what is the treatment of 200 rupees? Of course, you will debit your investment. Investment ki value to बढ़ गई. You have to debit your investment. But what is the credit? Standard says that you have to consider that previously acquired interest. Like if you would have sold this previously acquired interest, okay, and you acquire this 20% today. So what is the treatment of this sale transaction? Where the profit or loss will go, right? The same treatment has to be happen in Ind AS 103 also. NCI valuation on acquisition date and subsequent dates. Of course, when I talk about acquisition date, NCI has to be measured by 2 methods: proportionate interest in net asset method and the fair value method. So for every NCI, you have to see whether you are opting for fair value method or you are opting for proportionate interest in net asset method. If question is silent, you are free to use any method. If question has indicated that you have to apply fair value method or proportionate interest in net asset method, you have to use accordingly. And subsequently, so 103 talks about acquisition date and 110 talks about the subsequent treatment. Okay. So NCI has to be added or reduced by increase in the by the post acquisition profit, post acquisition losses, by the fair value adjustments, okay, by the dividend paid. So these are the adjustment which you have to do in NCI for computing the closing value of NCI. Goodwill, I spoke about goodwill. So goodwill has to be calculated on the acquisition date, which is your consideration, purchase consideration, okay, plus non-controlling interest minus net identifiable assets, okay. So this will give you a goodwill, and of course subsequently goodwill has to be tested for impairment. Dividend treatment, very, very important. You need to look at the dividend has been paid by pre-acquisition profit, post-acquisition profit. So by which period profit the dividend has been paid. If dividend has been paid from the pre-acquisition profit, it will be treated as a recovery of the investment, right? And it will be reduced from the cost or carrying value of the investment. But if it is out of post-acquisition profit, then what will happen? So if dividend income is recognized in the parent's books, okay, in their parent standalone financial statement, separate financial statement, then such dividend has to be eliminated, right? So parent share has been eliminated as a intra-group income, intra-group transaction, and NCI shares of dividend reduces the closing NCI, and of course console retained earnings should not include your intra-group income, right? So this is a intra-group transaction. Subsidiary is paying dividend to the parent, so that has to be eliminated, okay? But if dividend is declared but not paid, but there is a right to receive dividend is established, right? Then parent has recognized income and parent has recognized receivable and subsidiary has recognized payable, so that receivable payable is also required to be eliminated. Computation of fair value of the net identifiable assets or net worth on the acquisition date, very, very important. What is important here? Let me tell you. When you fair value, of course, this is a standard which talks about fair value of everything. Fair value of consideration, fair value of net identifiable asset, right? So fair value of even NCI as well. So when you fair value your net identifiable asset, which includes your assets as well as liability. So total assets minus total liability is equal to net identifiable assets acquired in the business transaction. So first of all, you have to keep your assets and liabilities at fair value, right? Number one. Number two, even if the acquiring company has not recognized some intangible assets, but acquirer is paying for that, right? In that case, for example, acquirer is paying for a brand name, acquirer is paying for the customer contracts. When Facebook acquired WhatsApp, they paid a huge amount of premium for the customer relationship, for the customer list, right? So in that case, those intangible assets which are not recorded by the acquiree, that is also required to be recorded in the acquirer books as a net identifiable assets. Same goes to the contingent liability also. The company has a contingent liability, the acquiree has a contingent liability, but when acquirer is acquiring the company, while computing the net identifiable assets, the acquirer has to do the fair valuation of the contingent liability if there is a present obligation and the reliable estimate can be made, right? So this contingent liability, unrecorded intangible asset, this will also become part of your net identifiable assets. And whenever there is a change in the fair value of the assets and liabilities, another animal will come into the zoo, and the name of that animal is deferred tax asset and deferred tax liability. Okay, so don't forget to compute DTA and DTL on these fair value movements. Why? Because it will also impact your goodwill and gain on bargain purchase computation. At times student made the mistake, right? They forgot to compute the DTA and DTL on such transaction, and their goodwill or gain on bargain purchase will also becomes incorrect. Okay, so that is also important. What else is important? So at times the acquirer end up paying some amount for the pre-acquisition, right, transaction. For example, replacement awards. Okay. So the acquiring company employee has got some share-based payment. Now acquirer is giving those share-based payment. So two kind of error happens here. For example, the acquirer has paid 100 crore, okay, for replacing the award of the acquiree's company's employees. So now 100 crore out of 100 crore, 50 crore or let's say 60 crore pertains to the pre-acquisition period. Okay. So that will be considered as a consideration of the business combination. But post-combination period will be treated as an expense, right? So that will not form part of the consideration. That is another aspect. Okay. So the point is, whatever amount pertains to the pre-combination period, it will come as a business combination transaction while computing goodwill or gain on bargain purchase. The rest will be treated as a expense in the future period. Then business combination expenses. The company is issued shares and there were some share issue expenses, due diligence expenses. The company is paying, the company is retaining the CFO of the acquirer, is retaining the CFO of the acquiree, and the acquirer is also paying some compensation to the CFO, the increased salary for the future period. So that will not form part of the business combination. It has to be treated as an expense. Okay. So business combination expense, you have to be very much clear that whether it will be form part of your business combination adjustment or it will not form part of your business combination adjustment, right? So these are the important aspects in your business combination and the consolidation, computation of retained earning pre and post. Very, 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 very important, right? So pre-acquisition retained earning, post-acquisition retained earning, that is very, very important. One thing I would like to address here, you never split your retained earning merely by the number of months, right? For example, your closing retained earning is 1,000 rupees and you said that the this pertains to, let's say, 24 months. So don't divide by 24, multiply by post acquisition period. You have to see what question is asking. Might be question has given you some exceptional adjustments, right? So you have to take care of those exceptional adjustments in the pre-acquisition period or post-acquisition period to arrive at a post-acquisition retained earnings, to arrive at the consolidated closing retained earnings, right? Don't split only by the months, right? So then after subsidiary, who is a subsidiary? When there is a control. What is meant by control? When there is a dominating rights, right? When the entity can dominate the relevant decisions of the relevant activities. What is associate? When there is a significant influence. Okay. The company cannot dominate, the company can participate. So in case of associate, Ind AS 28 is applicable. A very simple thing. When the company acquire the investment, it has to be measured at cost. Subsequently, it has to be added or it has to be deducted by the post-acquisition profit or losses, right? So then what is your joint arrangement? Your joint arrangement includes your joint operations and joint venture. So one thing is very, very important in joint arrangement. Number one, there has to be contractual arrangement. Contract has to be there. Number two, there has to be unanimous rights to take the decisions. Okay. If these two aspects are present, it will be a joint arrangement. Now, what's the difference between joint operations and the joint venture? When the parties have a rights to the assets and liabilities of the entity, it is known as a joint operation. But when the parties have the rights to the results of the entity, when the parties have net rights to the results of the entity, it will be considered as a net assets to the entity. It will be considered as a joint venture. In case of a joint venture, the accounting treatment, the consolidation happens in the same manner as per associate. That is why the title is, Ind AS 28 title is accounting for investment in associate and joint venture. Equity method of accounting has to be applicable. In case of joint operation, proportionate accounting has to be applicable, right? So these are the very important aspects in your group accounting. I talked about business combination, consolidation, dividend, your pre-acquisition, post-acquisition profit, NCI, step acquisition, associate, joint venture. These are the very, very, very important aspects in your group accounting paper. Shilpa ma'am, do you have any inputs here?
Students, since this question is mandatory and students sometimes leave this question mainly because their balance sheet doesn't tally. So don't just go for tallying the balance sheet. What is important is passing the correct adjustment, passing correct accounting treatment for each and every adjustment. do treat every adjustment individually and do double entry for every adjustment. Automatically your balance sheet will tell you. And even in case your balance sheet doesn't tell you, don't leave this question. Do it to the extent possible, because our examinations manner of evaluation is step marking. So for every correct step you will get marks, irrespective of your balance sheet is not telling. It is very nominal marks which is given to telling of of balance sheet. So don't skip the question just because your balance sheet won't tally and you'll lose marks. It will not be like that. Over to you, sir.
Yeah, sure. Now we will see the biggest animal, which is elephant in the room. So financial instruments. The first advice I would like to advise here, don't scared of the financial instrument. Of course, it requires lot and lot of practice. It requires lot and lot of practice. The biggest motivation to understand financial instrument is the sure shot marks, right? Like Shilpa ma'am suggested, the group accounting financial instrument Ind AS 115, it covers 30 to 35 marks, right? So this is the biggest motivation the student has to carry with them, right? Three standards. Ind AS 32. Ind AS 32 talks about what is a financial asset, what is a financial liability, what is an equity instrument, right? It defines those instruments. The basic principle is, what is a financial asset? When there is a contractual right to receive cash or financial asset of the other entity, so that is a financial asset. When there is a contractual obligation to deliver cash, it is the financial liability. Equity is the residual instrument, right? So Ind AS 32 is more of like a presentation theoretical related standard. The biggest cream lies in Ind AS 109. Ind AS 109, it talks about lot of aspects, right? You always need to remember there are the 4 pillars of every accounting standard, right? 4 pillars. What is this 4 pillars? RMPD: recognition, measurement, presentation, disclosure. So whenever you read any Ind AS, and I'm not saying related party disclosure, maybe wo recognition and measurement hoga, right? The name is related party disclosure, so it will not cover your recognition and measurement. But generally, the accounting standard covers the 4 facets of the accounting, right? Recognition, measurement, presentation, disclosure. So this Ind AS 109 covers recognition, measurement, presentation is covered by Ind AS 32, disclosure is covered by Ind AS 107. So 109 talks about the classification of the financial instrument, right? Financial asset and financial liability. Remember, the accounting of financial instrument depends on the classification of the financial instrument. And what is the classification of the financial instrument? There are 3 classification to the financial asset and 2 classification to the financial liability. 3 classification to the financial asset: amortized cost, FVTPL, FVTOCI, right? Now this 3 classification to the financial asset, it depends on the 2 model. Accounting depends on classification, classification depends on the 2 model. What is this 2 model? Your cash flow characteristics and business model. Business model means why you have purchased this asset. That is business model. Do you want to hold this asset till maturity? Do you want to trade in this asset? Or do you want to hold as well as you can sell this asset also, right? This is known as a business model. What is your cash flow characteristics? So cash flow characteristics means SPPI. SPPI means solely payment of principal and interest. Don't go that technical. Simple, ask a question whether this financial instrument, financial asset will give you the return of the cash flows, whether it will give you interest and the principal or interest or the principal, right? So if that instrument carries interest or principal, it means SPPI test is meeting, right? So if SPPI test is meeting, it can be your amortized cost also, it can be your FVTOCI also. So to cut a long story short, first of all, if you want to hold the strength on financial instrument, first thing you need to classify, is it a financial asset or is it a financial liability? Yes or no. If it is a financial asset, what is the classification? Is it FVTPL? Is it FVTOCI or is it amortized cost? FVTPL is generally residual category, right? So you need to identify, is it a FVTPL, FVTOCI or amortized cost financial asset? For financial liability, is it a amortized cost or FVTPL, right? Of course, the principles are given. Once you have identified that, then what is the initial measurement? What is the subsequent measurement? For example, if it is amortized cost, then loan. So loan can be at a fixed rate of interest also, loan can be at a floating rate of interest also. you have to do the EIR accounting of interest, EIR accounting of the loan, effective interest rate accounting of the loan, right? What is the effective interest rate accounting? For example, I have taken a loan from the bank for 100 rupees. Bank has deducted 10 rupee as a processing fee. How much I got from the bank? 90 rupee technically. 100, bank has given me 100, but I have given back to the bank 10 rupee processing fee. Net I have 90 rupee. But how much I'll pay to the bank? How much I'll pay to the bank? 100 rupee as a principal, assuming interest is 0 for the time being. What is my EIR? My EIR is 10 divided by 90. My EIR is almost 11%, right? This is known as effective interest rate. Okay. So the point is, if it is amortized cost, you have to measure your financial assets, financial liability, you have to measure it at effective interest rate, at amortized cost, right? And of course, you have to accrete interest at the every reporting date. Okay. You have to charge interest, you have to accrete interest. If it is FVTPL, FVTOCI, at the initial measurement and subsequent measurement, you have to do it fair value. Okay. You have to fair value. If it is FVTPL, the fair value changes will go to P&L. If FVTOCI, fair value changes go to the other comprehensive income, right? So classification of instrument, its subsequent measurement. So loan accounting, right? If it is a fixed rate loan accounting, life is very simple. Original effective interest rate remain unchanged. Apply the EIR to the opening amortized cost. But what happens if it is a floating rate interest? Then of course, where the contractual interest is linked to the benchmark, right? Then you have to revise the future cash flows using the revised benchmark. When the benchmark rate changes, you have to revise the future cash flows, and of course you have to update the EIR to reflect the changed contractual cash flows. So you have to revise your EIR also. Compound financial instrument, again, what is meant by compound? Which has a characteristics of equity as well as debt. For example, the company has issued a loan, issued a debenture, non-convertible debenture, for example, and the company has issued a debenture at 6%, but the market rate is 10%, right? So it means if the company has issued debenture at 6% for 1 lakh rupee and the market rate of interest is 10%, it means this debenture carries some risk also. This debenture carries some equity portion also. So what you will do, whenever there is a compound financial instrument, always remember liability has to be valued first, equity will be the residual. Liability has to be valued first, equity has to be the residual, right? So how we will measure the liability? For example, your debenture will give you the interest. You have to pay interest, right? So present value of the interest you have to compute. Present value of the principal redemption amount you have to compute. But you need to compute at the market rate of interest, not 6%, 10%. So if you have issued debenture for 1 lakh rupee, but when you discount it with the 10%, probably the value will be 80,000 rupees. So what is 20,000 rupees? It is residual equity. It is equity, right? Now this 80,000 rupees has to be unwinded with the interest rate so that it will become 1 lakh rupee. Okay. So the point is how to deal with the compound financial instrument. So this is a very important aspect from the examination perspective. Accounting of modification of the loan, right? Whenever there is a change in the terms and condition of the loan, you have to look at the 10% test, right? So the revised, your contractual cash flows as per the revised terms and condition, right? Using the original effective interest rate. If the value of the loan differs more than 10% of the carrying value of the loan, you can say that there is a modification. And this modification is the substantial modification. Whenever there is a substantial modification, you have to de-recognize the old liability and you have to recognize the new liability. Okay. But if the difference is less than 10%, then you have to do the modification accounting. You are not required to de-recognize the old liability. You have to just modify the old liability. Okay. The last one is derivative accounting in case of forward and spot rate for the foreign currency loan. Very, very important. In your question, you will be provided with a spot rate, closing rate, forward rate. 3 rates are given in your question. Spot rate means spot rate, Turant. Spot rate means today's rate. Forward rate means future rate, and closing rate means the rate on the date of closing, reporting date rate. You have taken a foreign currency loan, right? And your functional currency is INR. Okay. So this foreign currency loan has to be measured using the principle of Ind AS 109 and Ind AS 21. Okay. So from the perspective of Ind AS 109, this loan is just like a loan. You have to do the EIR accounting also, right? But from the perspective of Ind AS 21, right? This foreign currency loan has to be measured initially on the spot rate, and at the closing rate. This foreign currency loan being a monetary liability, monetary item, it has to be remeasured at the closing rate. But at the same time, the company has also entered into a derivative, which is more like a forward, right? So the company has entered into a derivative, forward contract, for which the company has a forward rate, right? So this derivative has to be measured initially and subsequently at fair value. But for the purpose of remeasurement of this foreign currency loan, as per Ind AS 21, spot rate and closing rate will be applicable. This forward rate will not be applicable for the foreign currency loan. The derivative accounting has to happen separately and the loan accounting has to be happen separately. So this is one of the important aspect in this financial instrument. So please remember 109, do lot of practice in 109, discuss the classification conditions, recognition conditions, right? Measurement, modification, impairment, which is your ECL model, expected credit loss model, the life cycle, stage 1, stage 2, stage 3, right? And your derecognition and the disclosure aspect, which is given in Ind AS 107. Very, very important. Any input from you, Shilpa ma'am, on this?
Yeah. Students, as sir has mentioned, that this topic is very technical and it's also very huge also. So one way of just getting hold of this chapter is to practice more and more questions. Sometimes the concepts which you are not able to understand by reading or by just getting heard, you can understand that concept by solving questions. The questions, more and more questions you solve, you'll be in that you'll memorize the concepts and that will help you in your examination also. So in this particular topic, I will request everybody that please go for good number of practice, and we have also given good number of illustrations in our study material because of this only. So just have a good practice for this particular topic.
Yes, sure. Then the next one is your revenue, your top line, right? So this standard revenue from contract with the customer, it's a customer centric standard, right? If you see the basic difference between the old accounting standard and Indian accounting standard, Ind AS are very substance based standard, and this 115 is a real life standard. You can relate each and every concept of Ind AS 115 from your belongings, right? You can relate to the standard 115. Always remember, for every revenue related aspect, you have to weigh in the 5-step model. This is the core heart of the standard. Okay. 5-step model means, of course, identify whether it is a contract with the customer. And in the step number one thing is very, very important, and which is you need to recognize your revenue to the extent your collection is probable. You purchased a shirt from your friend. Okay. And your friend has raised an invoice of 2000 rupees. But your friend knows that you will pay only 1500 rupees because you are his class friend. So your friend will recognize a revenue of 1500 rupees, not 2000 rupees, right? While the invoice has been raised at 2000 rupees. So this point is very, very important, that revenue has to be recognized to the extent collection is probable. Step number 1 is identify the contract with the customer. Step number 2 is your determine the performance obligation, right? So very, very important aspect. You need to allocate your revenue in case of more than one performance obligation, right? Because whenever there is a more than one performance obligation, you have to allocate your revenue in the standalone selling price of those performance obligations. Okay. So how will you determine the standalone selling price? How will you allocate the standalone selling price? That is very important. Bill and hold are very, very important in 115. Bill and hold arrangement, right? So you need to look at the 4 conditions of the bill and hold arrangement. So if a customer is purchasing goods from the company and on the customer request, company is also storing the goods, right? So whether the storage services has to be considered as a separate performance obligation, you need to look at. And one of the question, if my memory serves me right, illustration number 67 of the ICAI study material is there on the bill and hold arrangement. Catch-up adjustment in case of variable consideration, very, very important. Volume discount, right? In case of variable consideration, where there is a volume discount, where there is an incentive, slab-based incentive, right? So whenever there is a variable consideration at every reporting date, you have to do the catch-up adjustments so that your revenue as on date will reflect the current facts and circumstances. Loyalty award points, very, very important. Loyalty, right? So you are purchasing some goods and you are getting some points. From these points, you will be able to get some future goods and services. So by purchasing today, you are getting some rights to purchase something in future also. That will also be considered as a separate performance obligation. And in that case, whatever you have received today, your revenue today, it has to be allocated in the standalone selling price of the current purchase and the right of future purchases. Okay. So this loyalty award points is again very, very important. Performance obligation satisfied over time or point in time. As I told you, the first step was identify the contract with the customer. Second step was determine performance obligation. Third step was determine the transaction price. And transaction price includes fixed consideration, variable consideration. In your transaction price, four things are very, very important. Variable consideration aspect, significant financing component, non-cash consideration, consideration payable to customer. Then when it comes to allocation of transaction price, like we discussed revenue allocation. Okay. So allocation of transaction price, you have to allocate the transaction price into the standalone selling price of the performance obligation. But if it is not be able to estimate it, you have to apply the adjusted market assessment approach, cost plus margin approach, residual approach. And once everything is settled, now comes to the fifth step. And fifth step is you need to recognize your revenue at a point in time or over the period of time, right? And in the variable consideration, expected value or most likely method, that is very important. Expected value method is applicable when there is a multiple outcome of a single event. It is a probability weighted approach, and most likely approach is like a binary approach. Whenever there is a single outcome, whether it will happen, it will not happen, it's a most likely approach. In overall, this Ind AS 115 is very, very important standard, very detailed standard, very lengthy standard. One of the key message I want to highlight here for having a control over Ind AS 115, when you read Ind AS 115 and for every big standard, you need to know what is your territory of the standard. You need to know that. For example, write down the important pointers. Let's say step number one. Step number one is identify the contract with the customer. What are the key points and the concepts in step number one? Let's say the probability of collection. That is important aspect. Contract term is an important aspect. Okay. Contract combination is an important aspect, right? Separation is an important aspect. So very, very important. When you look at the determination of performance obligation, very, very important. Right of return, material right, warranties, then your loyalty award points, very, very important. When you jot down the important concepts in those steps or in those topics, you will be able to have a control over those topics, right? And next, try to relate those topics with your real life. You will be able to understand these concepts and you will be able to retain these concepts by heart for the lifetime, I must say. Yes. Any input from you, Shilpa ma'am, on this 115?
Sir, you have all very, very well covered this topic. You have this expertise in this. So students, whatever sir has given the guidance, please follow them religiously. It will really help to just get mastery on this standard. So you can move to other.
Yeah, Ind AS 102, share-based payments. Okay. So share-based payments, there are two kind of share-based payment. And one tip I want to tell you, if you see the title of the standard, you will be able to know what is the expectation of the standard. Share-based payment based on the shares, right? Simple. So active voice and passive voice, you must have, remember in the grammar, active voice, passive voice, share-based payment based on shares. Now there are two aspects. One, the company will give you the shares. And how will you get the money? You will sell the shares in the market and you will get the money. So employee will get the money, vendor will get the money. So when the company issues the shares in return of goods and services, it is known as a equity settled share-based payments. But when the company is paying money on the basis of value of the shares to the employees or vendors, it is known as a cash settled share-based payment. Since the word equity settled share-based payment is there, so whenever the company is issuing equity, right, or the company is issuing cash, so the important aspect is, if it is equity settled share-based payment, it has to be measured at the grant date fair value. And you need to record employee benefit expense over the vesting period. What is the vesting period? For example, a company has issued 1000 stock options to the employee who will remain in the company for 3 years. 3 years is known as a vesting period. Okay, what is a grant date? Day 1 is known as a grant date. You take the day 1 grant date fair value, and accordingly you will just amortize the total expense 1000 options multiply by, let's say, 220 rupees the fair value, multiply by expected number of employee who will remain in the organization till the last day of the 3 years, right? So accounting entry will be your employee benefit expense account debit to share based payment reserve. Now many students ask, sir, if we will write equity settled share based reserve, then whether it will be right or not. If we will write share based payment reserve, equity settled reserve, so examiner will not deduct your marks on the basis of nomenclature. But yes, it should not be a liability, it should be reserve. It is part of your other equity. Okay, expense has to be in the employee benefit expense, credit has to be in the reserves. Okay, so, and the one thing is very, very important. If examiner wants to confuse you, he will give you that ABC Limited has issued 1000 stock options. The grant date fair value is 1000 rupees and the vesting period is 3 years, 31st March 24, 25, 26. The fair value of such shares on 31st March 24 is 1020 rupee. 31st March 25, 1040 rupee. 31st March 26, 1100 rupee. So don't remeasure, right? For equity settled share based payment, grant date fair value is the holistic date, is the holistic fair value, right? You are not required to remeasure. But if it is cash settled share based payment, then what to do? Then of course you need to remeasure your cash settled share based payment on the basis of the fair value on the reporting date. Okay, accounting entry will be employee benefit expenses to the share based payment liability. Here it comes as a liability, there it was reserves. Okay, so then accounting for stock appreciation right vested immediately or after a few years. What is stock appreciation right? It is like a cash settled share based payment. So let's say the vesting period was 3 years, but after 2 year company has decided to vest immediately. Then, so it is known as a accelerated vesting, right? So whatever future expenses was there, it has to be recorded immediately. Okay, it has to be recorded immediately. Now, sir, what will happen if there is a choice? The company may issue shares or the company may settle in cash. Now, if there is a choice, the first question you need to ask, the choice is at whose discretion? Is whether it is an employee discretion or it is an entity discretion. If it is an entity discretion, then you need to look at what is the past pattern of that entity, whether entity used to issue shares or entity used to settle in cash. What is the objective of the entity, right? What is the win-win situation for the entity? If entity believes that the entity has to issue shares, the entire transaction has to be nomenclated as an equity settled share based payment. If entity believes the entity will pay the money, then the entire transaction has to be nomenclated as a cash settled share based payment. But if the discretion is with the employee, then it will become a compound instrument. You have to measure what could be the chances, what could be the fair value of the liability component, and the differential is the equity settled share based payment. Okay, so this depends on the choice. And of course, the last one is the modification in the share based payment term. So whenever there is a modification, you have to do the modification accounting in Ind AS 102. These are the few aspects, and one disclaimer I want to add here, which Shilpa ma'am will also agree. These are not only topic which will be covered. These are the important topic which we have highlighted here. So don't think these are the only topic which are coming in this November 26 exam. No, it can be more than this also, right? And of course, out of these topics also, right? So you have to cover the entire topic. Due to the paucity of the time, considering the important aspect, we want to touch base so that you will have a good preparation around these important aspects as well. Any point, any input from you, Shilpa ma'am?
Yes, sir. For this particular chapter, I would like to say, students, mostly you have to pass journal entries. So, and because it involves more than 1 year, sometimes calculations, the vesting period is for 3 to 4 years. So calculation lasts for 2 to 3 years. In that case, students make mistake. This is the commonly committed errors which we got the feedback from examiners, is that students know the concepts, they are passing the correct accounting entry, but they are in the calculation part because it involves calculation for every year. So that's why one have to be very careful that what type of mistake they can do. Sometimes they transpose the numbers, like 1052 can be written as 1025. So don't do such type of, be alert and conscious while doing computation for this particular chapter, and focus on the journal entry part also, because mostly in questions journal entries are tested. This concept of share based payment is tested through journal entries, passing journal entries. Okay, sir, one more topic of this category A, and then you can
Yes. Yeah.
give to me.
So the last topic is Ind AS 116 in the category A, which is leases. Very, very important topic. And this topic has converted many entities from the debt-free entity to the debt entity, right? And the classic example which I have witnessed in my real life. So my entity in which I was working was a debt-free entity. But on 1st April 2019, it became a debt entity, right? Just because of Ind AS 116. So in Ind AS 116, because why this standard becomes very, very important, because every student has an experience of leases. Either he is living in a rental accommodation, or he has provided rental accommodation, or he has seen accounting standard 19 treatment. But this Ind AS 116 treatment from the lessee perspective has completely changed, right? So one thing is very, very important is identification of a lease, right? And when I talk about identification of a lease, so in our old days, we used to remember underlying asset. Now this underlying asset has been changed to the identified asset. Okay. So identified asset is a very, very important term. You need to revise. You need to understand that what is meant by identified asset. While there has to be explicit or implicit mentioned in the contract, the lessor should not have a substantive right to replace the asset. Okay. So this identified asset becomes very important. Number two, the right to use has been transferred as a right to control the use. And very simple example, if I would say quickly, right to control the use means, for example, I purchased a car, and I have given this car to Shilpa ma'am for a week, right? Because I was traveling, Shilpa ma'am told that, can you please give this car to me for a week? I told, okay, ma'am. So I have handed over the keys to her, and I told, please get the fuel from this XYZ fuel station. Okay, don't drive beyond 80 kilometers per hour. Don't take this car beyond Gurgaon or Noida. I have given her so many instructions, right? Now the question is, what is right to use? So who has a right to use? Whether I have the right to use or Shilpa ma'am has the right to use. Since she has the car, she has the keys, she is having a right to use. But who is controlling the use? I am controlling the use. So right to control the use becomes very, 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 very important. When the question will come, you need to see who has the right to control the use of the asset, right? If the lessee does not have a right to control the use of the asset, lessor has not transferred the right to control the use, that question will not cover under Ind AS 116. Okay, you cannot apply ROU asset accounting on those leasing arrangement. So identification of lease is very, very important. Then the initial recognition and the measurement and subsequent measurement. So initially your lease arrangement has to be recognized as right of use asset, and the lease liability has to be credited, right? One of the important aspect when you recognize right of use asset is your provision for decommissioning obligation. So Ind AS 16 also carries the provision for decommissioning obligation. Ind AS 116 also carries the provision of decommissioning obligation, right? And if the question becomes the tougher and the toughest, right? The question may ask you, a company has installed a telecom tower, okay, on the leasehold land, and the lessor has told the company that after 10 years, you have to remove this tower and you have to return my land in the same condition in which I have given it to you. And the provision for decommissioning is 10,000 rupees, assuming. The company has a policy of capitalizing this provision for decommissioning in the property, plant and equipment, which is tower, right? So please provide right of use asset, and company and the examiner has given you some facts and circumstances, some numbers. So examiner wants to check your knowledge whether you will add the provision for decommissioning in this case in ROU or not. So the point is, if the provision for decommissioning has been added to the PP&E, you will not add this provision for decommissioning into the ROU. But if it is not added in PP, then you can add in ROU, or you have to clarify, right, that both the options are available. And in this question, we have added in ROU or we have added in PP&E. So to cut a long story short, you have to be very clear whenever you are capitalizing right of use asset, you have to be very clear that the treatment, whether this treatment is given in some other standards or not. So whenever you read any standard, my advice is to read the standard along with the other standard which has the similar kind of the concepts, right? In this case, when you are revising this standard, you will have a equivalent revision of other standard as well, right? And it will increase your kind of knowledge and increase your conceptual clarity as well. So initial recognition, right of use asset, and the lease liability, which is present value of the future lease payments. Okay, so lot of aspects are there in terms of lease payments, in terms of ROU items. Okay, initial direct cost, provision for decommissioning, payment made on or before commencement date, future liability present value. So these are the elements of ROU. Then initially your ROU and lease liability has been recognized. Now subsequent measurement of ROU. Subsequent measurement of ROU is just like a PP&E, right? The only thing is, for PP&E you have a 3 depreciation method, but for ROU you have only straight line method. This is the difference only. Okay. Otherwise, like PP&E, when you are computing the carrying value of PP&E, you are doing cost minus accumulated depreciation minus accumulated impairment loss. The carrying amount of ROU is also your cost minus accumulated depreciation minus accumulated impairment loss. Okay. And if there are some assets which are owned asset and the same asset which are leasehold asset also, for example, company has 5 building, 3 company has owned building, 2 company has a leased building. Okay. So if you are opting for a revaluation model for the owned building, and the same asset in the same class of asset are leasehold asset also, so you have to opt for revaluation model for these class of asset also. Okay, for these assets also. So you have to, when you read 116 and when you read subsequent measurement of ROU asset, you have to look at your Ind AS 16 also. Okay, so subsequent measurement ROU has to be depreciated, impairment testing has to happen, cost of revaluation model needs to be checked, what is the depreciation period. Okay, so these aspect needs to be looked at from the ROU perspective. From the lease liability perspective, you have to pay the lease liability, it will be reduced, and you have to add the interest cost to the lease liability. Remeasurement are very important whenever there is a change in the facts and circumstances, or whenever there is a change in the scope. Of course, the modification and the remeasurement happens. One thing you always remember, whenever there is a modification which is happening, means change in the scope of the lease, or whenever the remeasurement is happening, earlier you were thinking that I will not avail the termination period option. Now you are thinking that I will avail the termination period option. Of course, your lease period will get changed and your ROU lease liability calculation will get changed. So whenever there is a remeasurement and the modification, always you need to compute the revised lease liability, and whatever revised lease liability has to be added or reduced, right? The same amount you have to charge or you have to reduce to the ROU. For example, if revised lease liability is increased by 20,000 rupees, so you have to debit your ROU also by 20,000 rupees. Your revised lease liability decreased by 40,000 rupees, for example, you have to reduce your ROU by 40,000 rupees. But sir, if the balance of ROU is available only for 30,000 rupees, then the 10,000 will be debited to the P&L. Okay, so very, very important aspect. If a complex question will come, of course the question will check your conceptual clarity on the remeasurement and the lease modification. Then the presentation of the lease liability in the balance sheet. If question will ask you to prepare the extract of the balance sheet also, so you need to also show what is your lease liability in terms of your current and non-current portion. So always prepare lease liability schedule, always prepare ROU schedule. Okay, then your depreciation and interest cost will come in the P&L. Your payment of lease liability will go to the cash flow from financing activity in the cash flow, and in the balance sheet your ROU asset will come and your lease liability will come as a financial liability, current as well as non-current. Okay, so this 116 is very, very important from the perspective of leases, right? From the lessee perspective, very, very important. Sublease concept is very important, and the sale and leaseback is very, very important, right? So I would suggest lessee accounting, very thorough preparation should be there. I would suggest sale and leaseback, very, very important, and sublease, very, very important. Of course, there are some exceptions also to ROU and lease liability accounting, which is short-term leases and the low value leases. Okay. Yes, lessor accounting is also there, right? But there is no major change in the lessor accounting from the old accounting standards. Okay. Yes. Any input here, ma'am?
So this truly said the students that this is very important standard, not only from the perspective of your examination, but also from your real life also. As sir told, it has affected many balance sheets, many entities balance sheet. It has made the entity from debt free to debt entities. So this standard is very important from your real life prospects also. And besides that, there were many queries which I believe sir has already explained, because most of the students were facing problems in certain important standards like your consolidated financial statements, financial instruments, and also on 115. Query was on 116 also. So students, I believe your queries have been, technical queries have been resolved. For your general queries, I'll be taking care of. So sir, in case you want to give any guidance, otherwise we can
Yeah,
move
sure.
to other part.
So one thing is very, very important for any exam, be it competitive or be it subjective or be it objective. So very, very important guidance is to you have to have a very robust kind of revision, right? And you know, how much time you spent, that is important, but that is not the only thing which is important. How you prepare your strategy for, spending your time, that becomes very, very important. Okay. So for example, whenever you in and at least in financial reporting paper, whenever you revise this paper, right? Revise this paper in the buckets. Okay. When I say buckets, so let's say you have started asset related standard. Okay. And you have started with Ind AS 16. Okay. And you went to the recognition part of Ind AS 16, which says that the PPA has to be recognized when cost is reliable, when the cost is measurable and the future economic benefit is reliable. Okay. So this recognition condition is in every standard. Might be few more condition may come, but these are the two basic condition which is there in the every standard, every asset based standard. So when you try to relate these aspects, so quickly you are revising the other standards also. Okay. So while discussing PP, and when you went to Ind AS 38, you will found the concept of revaluation surplus, the concept of depreciation, and the name has been changed to amortization in intangible asset, right? Naam badal gaya, but the concept is same. Okay. The methods are same. The change in estimate, change in policy. Okay. So 50% of, I would say, when you read Ind AS 38, it is also a revision of Ind AS 16. Means in the revision, you are doing more revision. Okay. So that is a strategy. When you read Ind AS 40, investment property, it also talks about Ind AS 40, Ind AS 16 principles. So my thing is, when you read Ind AS 105, it talks about that whenever you recognize your non-current asset held for sale, at the time of initial recognition, it has to be lower of what? Lower of fair value less cost to sell and the carrying amount as per the applicable standard. Means Ind AS 16 or Ind AS 38. Again, it is testing your knowledge of Ind AS 16 and Ind AS 38, right? So these concepts, these standards are interrelated. And when you think about the interrelation, you are sharpening your mind. That is number one, because at times when you are reading one chapter, you are confined to that chapter and you are biased. You become biased, right? And it is automatic. It is not because you are a biased person. You become biased because you are confined to that chapter only. But when you relate that chapter with the other chapter, you become very holistic, right? You think about just linking that topic with the other topic as well. And this is a CA final exam. The examiner will not give you Ind AS 16 5 marks question. So Ind AS 16 नहीं लिखा होगा उस पे. The question can test your knowledge with different Ind AS, right? So this will help you. When you read consolidation, just make a chart. When subsidiary will be applicable, when it will become associate, when it will become joint venture, what is the accounting, how it is different in associate and joint venture, how it is different in subsidiary, right? So relate business combination with consolidation, right? So just make the buckets, okay? And when you read according to the buckets, it will be very helpful to you. Ind AS 23, 116, 16, 38, 40. So probably your time will become lesser for the preparation. That is number one. Number two, always try to relate with your real life example. Okay. This will help you in retaining the conceptual clarity. Another aspect, do more and more revision. And all those complex topics will require more revision. The simplest topic will require less revision, right? Because वो simple है. Okay. So just make a strategy for the complex topic. At least you have to do 3 times revision. You have to do at least 3 questions each. Okay, make a strategy. Okay, just write down the small pointers in a very summarized manner, My objective, and I would suggest, don't use artificial intelligence. If you use artificial intelligence, ChatGPT, Copilot, AI, please also apply your intelligence. Might be AI is summarizing you and just cutting through some topic. Okay, so might be AI can use the old concepts. So please, if you are summarizing, please apply your intelligence and then make your notes. Okay, the examination handy notes. You have to prepare a cheat sheet, not for the cheating, but for the revising, but for the memorizing. Okay, when you're traveling in bus, you open the cheat sheet and you revise one standard. Okay, and make the territory of every standard. What I need to cover in Ind AS 115. For example, there are 17 topics in Ind AS 115. For example, there are 14 aspects in Ind AS 116. Okay, lease payment, lease period. Okay, ROU classification, initial measurement, subsequent measurement ROU, liability, lease liability, short-term lease exemption, low-value lease exemption, then remeasurement, then modification, then lessor accounting, operating lease, finance lease. Okay, then sublease, sale and lease back. In your lease identification, identified asset, right of use asset. When you have the list of these 14 items, you will be able to remember, okay, these 14 items are there in Ind AS 116. You will have a control over the chapter, right? So this control will come from the practice. Do manifest that you become a chartered accountant, but with the manifest, please practice, please put your best effort, considering you will become a chartered accountant, right? Thank you everyone and all the best.
Thank you, sir. Very well said, sir, and very useful tip. Whatever tips you have given, sir. One have to study in detail, but at the same time, one have to do smart study. You have to use. You should learn how to use artificial intelligence, but artificial intelligence should not be used for learning. For that, you should use your own intelligence, because the understanding which you will develop, that will help you in identifying whether to what extent the answers or the use which you have taken from artificial intelligence is up to mark or not. So for this paper, what is required is to develop your own understanding, your conceptual knowledge. Very well said, sir. Be smart in your study preparation. Make small tips, as you have seen in previous slides which sir has shared. Sir have given important topics for every standard. For your business combination, he has mentioned share-based treatment, your deferred tax treatment, your acquisition date treatment, your non-controlling interest. Similarly, for every topic, like he has given example for 116 also, identify the main areas for which you have to do the preparation. For big standards, at least 7 to 8 standards before your second round of revision, 7 to 8 questions on every standard. And where the standards are smaller in comparison to the other ones, then you can have 4 to 5 questions for practice. That will comprehensively cover your revision also in due time, and it will also help you in understanding, being just robust and confident. You'll be confident when you are appearing for your examination. Okay, so thank you, sir. So see, students, because sir was able to cover only category A standards, I won't be, because of paucity of time, I'll be just touching upon every standard in category B, and category C I'll be leaving for you to work on this, because I have to cover some general queries also. In case I'm not able to cover everything in till 5 o'clock, we'll also be having Board of Studies BOS for success at CA exam, which will be somewhere in the month of September, and there I will cover the general tips as well. Right now, just moving to the category B, you can see my screen. In category B, we have identified certain Ind AS, which is Ind AS 36, Ind AS 33, 37, 21, 113, Ind AS 113, 23, 16, 7, 10, 12, and 1. These are the standards which have been grouped in category B, mainly because of their frequency and the weightage for which the question is being asked in the question paper or in the examination. So like Ind AS 36, which is on impairment of assets, if you see, questions are not tested in every examination, but in every alternate or in after 2 examination, the concept of Ind AS 36 is tested. For impairment of assets, what is the important provision which is covered is mainly your your impairment of cash generating units, where goodwill is also there, and there are other assets. And besides that cash generating unit assets, there are also corporate assets. How you have to impair these assets and whether impairment is there or not. As sir told you in earlier discussion, that when you have to allocate something, first allocate to the smaller part and then move on to the bigger part. Similarly, in impairment of assets also, when you are impairing any asset or you are finding out what amount of impairment is to be allocated to any particular asset, first of all, we have to see first the goodwill. In case there is a goodwill which is appearing in the block of assets, then you have, so in the group of assets, in that case, first you have to impair the goodwill. After impairing the goodwill, if certain amount is left for impairment, then that has to be allocated to other assets. And for other assets also, you have to check the fair value. In case your fair value is higher than the impairment, the recoverable value, in that case there won't be any impairment. But sorry, the recoverable value is higher than your value, then in that case no impairment is required. Otherwise, we'll go for impairment. Impairment, in case there are more than one asset, then pro rata basis of will be used for impairing the assets. So for impairment of the asset, one thing which is required is when you are acquiring the assets through business combination, there you are having non-controlling asset or non-controlling interest also. And in non-controlling interest, what you have to find out that whether the valuation of that non-controlling interest is as per fair value or as per proportionate share method. Because if you see the chapter in the study material on impairment of assets, you'll find certain questions where your non-controlling interest is measured at fair value. When non-controlling interest is measured at fair value, the goodwill value is also as per the market value, whatever the goodwill has been recognized in the financial statement. However, when you are measuring your non-controlling interest as per proportionate interest method, your the goodwill which is computed is not as per the market value, because it is not as per the fair value. So in that case, you have to rework and on your non-controlling asset. It is only for working, not for your presentation computation, but for working. Based on that, you have to identify what amount of impairment is to be done. For earning per share, it is very important standard in your real life also. For every financial statement, entities have to show what is the earning per share, that is basic earning per share, and also diluted earning per share. For diluted earning per share, your potential interest and your whatever we can say rights, bonus, these are the important concepts which are tested. So you have to practice questions based on these concepts as well. For India's 37 provisions, contingent liability and asset, this is more of a theoretical nature of standard, where it is practical but not numerical, not much of numerical. It is morely of theoretical, but practical questions are tested from this standard. What is to be the key point which you have to remember for this is that you have to use the terminologies which are used in the standard. In case you are explaining in your examination answer sheet in a very layman language, you won't be able to justify with the reasoning which is to be provided for arriving at any conclusion. Why? Because the terminologies which are used, they are very important and has been selected or used very appropriately. When you are not using those terminologies, it means somewhere you are lacking the conceptual clarity. And once you have that conceptual clarity, automatically you'll be using those terminologies. So usage of terminologies as given in India's 37 is very important to reflect that you have that conceptual clarity. Okay. And for this marking, step marking also, where questions are theoretical in nature, your usage of terminologies and key concepts, that is what is tested, and in that is, if given in your solution, you'll get the marks. The entire paragraph is not match word to word with the standard or with the study material answer, but usage of your words and your key concepts which you have mentioned or key reasonings you have provided, that will help you in fetching the marks. So very important that you be very careful while answering this standard. One more thing is that for in general tips also I'll be discussing is that very important is that for financial reporting you have to do written practice, especially when you have theoretical answers to produce. Okay, because whatever is given in your main answer in the study material or from where you are, wherever you are practicing, you will find answers are given in 3 to 4 paragraphs. You just go read that answer and then you think that you remember those all the concepts which has been mentioned. It is not possible. When you start writing, you will find that you have limited your answer only to 1 paragraph. So to come to that again 3 paragraphs, you have to do written practice also. That will bring your hand and mind coordination also. You will be able to appreciate each and every line which is given in that study material for that particular answer. So written practice of theoretical answers is very necessary. It is not only numerical questions which require written practice. For theoretical questions, I believe more of written practice is required. Okay. Then Ind AS 21, one amendment is there regarding lack of exchangeability, which has already been explained by sir. Besides that, concepts of your changes, effects of changes in foreign exchange rates, that has to be taken care of when you are doing your group accounting, and also in the books when there are, you can say, when present you are shifting from functional currency to presentation currency, or from your loan whatever foreign currency to presentation functional currency. What translation, whether it is a non-monetary item, it is a monetary item, what rate to be used. In case of non-monetary items, you have to use the historical rate or the rate at the time of transaction, while in case of monetary item, you have to use the rate at the closing rate. It means for every monetary item on reporting date, your evaluation of the foreign currency, what is the rate going on that closing date, that is important, because your liability may release or may revise based on if it is a monetary item. Then is your 113 Ind AS 23 borrowing cost. This is very important standard. We feel this is a small standard, but it is very important. It has many variety of questions, and it is very important to understand these variety. And for this, I will recommend you that test knowledge questions which are given in your study material. Besides test knowledge questions, practice questions which are given at the end of module 2. Please go through them thoroughly, because they will help you in understanding all the minute intricacies which are involved in this Ind AS 23 borrowing cost. Ind AS 16, sir, have already explained. This is Ind AS 16, Ind AS 38, your Ind AS 40. They are somewhere interlinked because certain provisions are common in all these 3 standards. For example, how to recognize, how to measure, and also for evaluation aspect with respect to your property, plant, and equipment. These are some important aspects. Non-exchange transactions, this is also common between Ind AS 36, Ind AS 38 and Ind AS 16. So very important standard. Questions are often tested from this property, plant, and equipment, or from investing property. Okay. Besides that, statement of cash flows, alternate examination questions are tested from statement of cash flows. Variety of questions are also possible. Mainly what is focus is your operating cash flow from operating activities, or the entire statement of cash flows, where you have to identify the cash flows from all the 3 activities. One more aspects which has been added as recently tested is on foreign currency translation. What is to be presented in statement of cash flows, and what not to be presented, and how to be presented. So take care of all these aspects and you'll be confident for this standard as well. Okay, these are other 2 standards. Income taxes, Ind AS 12, again alternate examination. We have a question on this particular standard. Also, most of the time, if you see question for MCQ portion, in your MCQ portion, one question MCQ is on your Ind AS 12. So this standard is very important. You have to practice this, and this standard is used in other standards also. It is interconnected also. So it is very important that you go through the provisions of Ind AS 12 as well. Okay. There was one amendment in Ind AS 1 and Ind AS 7 that has already been explained by sir. Please go through this. Okay. Now I'm just moving to the question paper, as I have a query on the pattern of the question paper. This is very important, student, because this time we are going to have a change in the question paper pattern, change in the MCQ part of the question paper pattern. For descriptive part, we'll be having the same pattern which is being followed from last 2 to 3 examination. There will be 6 questions. First question will be compulsory. Out of remaining 5 questions, 4 is to be attempted. 1 internal choice will be given. Every question will be of 14 marks. Except question 1, there will be subparts in other questions. But what is the change? Change is in the 30 marks MCQ type assessment. What is the change that you have to see students? Earlier we were having every MCQ of 2 marks. So in total for 30 marks paper, we were having 15 MCQs of 2 marks. Now this time there's a change. There will be 23 MCQs in total. And now there's no static rule that every MCQ will be of 2 marks. There'll be 16 MCQs of 1 marks each and 7 MCQs of 2 marks each. This is the question paper pattern which has been revised for MCQ portion, and it will be applicable from November 2026 examination. So students, a common complaint or common grievance which students have is that the paper of financial reporting is quite lengthy. Now, when you see number of MCQs are being increased from 15 MCQs to 23 MCQs, so you will feel that a question paper is getting lengthy. So again and again, I request you, please do proper time management, have a good written practice, because suppose in present scenario, when you are practicing at home, any question which you are able to solve in 6 minutes or 7 minutes or say 10 minutes, in examination time, if you have only 5 minutes left, you'll be able to solve it if you have done your written practice earlier. If you are having only 5 minutes but you have not done written practice earlier, the question which requires only 5 or 6 minutes, you won't be able to complete it. You will be taking more time, or you'll be leaving your answer incomplete. So it is very necessary that you have sufficient time yet. It is September, October complete month, and also 10 days of August. Start revising by writing in your copy, especially for theoretical answers and also for your descriptive questions, big questions, because hand-mind coordination will help you in having a sync, will help you to avoid as much of the error which is there, which happens in general. Also for speed, increasing the speed, and also because of written practice, you'll be giving long sitting hours also, which is very much required, because your question paper will be of 3 hours, and students generally after 2 hours get tired. So if you have written practice and have your hand won't pain, and also you won't feel tired, and you'll be able to sit for whole 3 hours during your examination also with same zeal. Okay. So just take note of this, that question paper, MCQ pattern of the question paper for MCQ part is being changed and questions are increased now. Okay. All questions will be compulsory. No choice will be given in your 30 marks MCQ based questions. There no reasoning is required. No negative marking is there. Yet number of questions have been increased. So you have to be very careful, because all questions will be application and analysis based. Okay. This is whatever sir has explained you, section wise weightage. This I have summarized in the form of table also. So division B, mostly if you see, like for example, we are seeing for section 6, which is 10 to 20%. This section 6 is your group accounting for group based group accounting, and here one complete question of 14 marks is asked. So 10 to 16 is the range. 14 marks question is asked within this range only. Similarly, if you see for section 5, where weightage is 10 to 15%, financial instrument is being categorized in this particular bucket or in this section. And one question of 10 marks is for sure being asked in every examination on financial instrument. Mainly question 2A. If you see the trend, you'll find question 2A belongs to financial instrument, and that is of 10 marks, which comes within the range of 9 to 13. This is given in your column D. Division B, descriptive questions. However, if you see division A MCQs, I have given even numbers, but now if you we have to see in this November 2026 examination what marks is allocation, but for sure section wise weightage compliance will be there. So the total which is given in the column E, that compliance will be there. So if question of 14 marks is being asked from your descriptive portion for compulsory question on consolidation, then we have remaining 6 questions for 6 marks to be asked for MCQs. This is very tentative. I'm giving you this as a suggestive table, and nowhere it communicates that this is the hard and fast rule and every question will be asked for this marks only. for MCQ portion. It is only a suggestive based on the whatever the questions, whatever the question paper pattern is there in the past few examinations. Based on that, I have prepared this table, and it is only suggestive. There may be variations. I'm just making this disclaimer. There may be some variation, especially when we are having a change in pattern in November 2026 examination. Study guidelines, students, this is very important because this study guidelines help you to understand what is to be excluded from the syllabus. It forms part of the syllabus, but it has been excluded for your preparation through study guidelines. So there are certain standards which have been excluded in entirety. They are Ind AS 29, Ind AS 117, which is on insurance contract, Ind AS 106, which is on exploration for and evaluation of mineral resources, and Ind AS 114, regulatory deferral accounts. These are industry specific standards, have been excluded in entirety. However, there are certain standards which are applicable to you. Questions are being tested in the examination, but certain topics, specific topics within that, subtopics within that standard has been excluded. For example, in your Ind AS 16 property, plant and equipment, we have excluded Ind AS Appendix B. Similarly, for Ind AS 37, 2 appendices have been excluded. So no question will be asked on these 2 appendices. So don't go through these. Just save your time, unnecessarily not required to study these 2 appendices for examination purpose. For knowledge purpose, everything is open for you. For examination purpose, you are not required to study these 2 appendices in Ind AS 13. Now, okay, what is list of topic-wise exclusions? Continuation to that, in the study guidelines, it is also mentioned what is the applicable study material. So, November 2024 edition of the study material with reprint of August 2025 onwards. Why I am mentioning reprint of August 2025? Because certain corrections which came to our notice that have been incorporated in the that particular edition. So in that reprint August 2025 onwards, so edition has not changed, but certain corrections have been incorporated. So those who are having old study material, they must please check whether they are studying from reprint material which is after August 2025. Even if it is November 2025 or May 2026, that will be carrying those corrections. Okay. Then is amendment. Amendments, since our edition is November 2024 edition, so any amendment covered till November 2024 has been given in the study material. Any amendments which have been released after November 2024 edition will definitely not appearing in your study material. So where to study those amendments? You have to refer the RTP. RTPs for your mate, because amendments came in the year 2025. There were 2 amendments which has been discussed by Alok sir. These 2 amendments are given in the RTP for May 2026, and they are also applicable for your November 26 examination. So read those amendments along with your study material. Okay. So amendments which are there, but in 2024, one amendment came which was on Ind AS 117 insurance contract. Insurance contract is an industry specific standard. That's why this has been excluded through study guidelines. Students are not required to study Ind AS 117. But because of notification of Ind AS 117, there were certain consequential amendments in other Ind AS. Those consequential amendments are considered as limited revisions in other Ind AS, and that is applicable to you. Let me tell you, students, when any new standard is notified, that is applicable 1 year hence after notification. So any standard which was notified in your say August 2024, that will be applicable after August 2025. So after August 2025 we had examination in September, so it was applicable at that time, but we have excluded through study guidelines. But consequential amendments which are limited revisions are applicable 6 months hence the notification. So any amendment which was limited revision in August 2024, so your applicability will be for your May examination. For May examination, that will be applicable, and for May examination, when it was applicable, you have to study those limited revisions. Generally, consequential amendments are very minor amendments. They do not affect the major provisions of the standards, but yes, you should be aware of those. Now, After 2024, two amendments came in May 25, and August 25. Since it was in 2025, it is applicable for your May 26 examination also, and for November 26 examination. We have summarized both the amendments that has been shown by the sir also on the screen. They are covered in your RTP as well, and that is applicable to you. So go through the amendments as well. For this, I would also try to I have tried to make two questions, one on Ind AS 1 and Ind AS 21, based on the amendments. So you'll be able to understand and appreciate those amendments through those questions which are given in the RTP for November 2026. It will be most probably web hosted. The RTP will be web hosted by next week, and then you can refer those questions also. Okay, RTPs are very important, student, because in RTP of financial reporting, every time I try to give new questions. So all the questions are mostly new. So they are required to be prepared very well, because, and at least the questions which are appearing in the previous RTPs. For current RTP, maybe that by that time question paper is set, so current RTP questions may not be tested, but sometimes, because in last to last examination, a question which was given in the RTP on Ind AS 7 that appeared in your same examination as well. So we cannot say it is only the based on trend analysis. What I was saying, that current RTP questions are not very frequently asked, but previous RTP questions are asked. So don't skip the previous 2-3 attempt RTPs for financial reporting. All the questions are new. RTP aims to understand whether you are having that particular conceptual clarity on particular index or not, because their questions are new. Sometimes questions are not of very high difficulty, they are of moderate difficulty, but because they appear for the first time in front of you, you may find it difficult to solve. So at that time, what is important is that how much conceptual clarity you are having. In case you have conceptual clarity, you will be able to solve that question. So to understand your conceptual clarity, to assess that conceptual clarity, you should go through RTP questions. Okay. So 117 is not applicable to you, but limited revisions or consequential amendments to other standards is applicable to you. Also, I have explained this, amendments issued on 7th May and 13th August is applicable to you for your November 2026 examination. These have been summarized and given in the RTP. May 26 RTP, maybe part 1 is given, amendment is covered there also, and same amendment will be providing in your November 2026 RTP as well. Okay. Besides, as you see, your entire syllabus of financial reporting is on Ind AS, but at certain places we have mentioned differences between Ind AS and AS wherever they are. However, besides those differences which are theoretical in nature, there are certain accounting standards and Indian accounting standards which are very, very different. There are huge differences between the standards. Like for India's 115 and accounting standards 7 and 9, there are huge difference between these two set of standards. So their questions may be tested on those difference part, only on difference part questions where practical scenario is given and you are asked to give the treatment as per accounting standard and Indian accounting standard. That may also be done. As per past trend analysis, no question has been asked, but will always be no question be asked. Won't be like that. It may be asked. So be prepared with that also, with this possibility also. Now, from where to prepare? Okay, students, since we are about to reach our 5 o'clock timing, so I'll be just quick in explaining from where to prepare. Otherwise, we'll cover in the BOS for Success also session, which will be in the month of September. Study material, MCQ practice portal, which is a practice dashboard, which is there on, once you log into your BOS knowledge portal, you will find this one tab on MCQ paper practice portal. Also LVC classes, which are in detail for financial reporting. Alok sir, which have covered your initial session today. So he is the prominent faculty there, and LVC have started from the month of July. Right now we are covering India's 115, and after that we'll be starting with asset-based standards. So you can go through the LVC also. In case you are revising any standard and you are not having any conceptual clarity, or you feel you need revision, you can go through these LVCs also. These LVCs are also available on YouTube at ICAI CA channel and CA Tube channel, and in a recorded version. If you go through ICAI CA Tube channel, you will find a playlist for every batch of your this LVC, we have a separate playlist, and from every playlist you can watch any video which is applicable for your examination. Amendments, I have already informed you. Besides amendments, all the video lectures which are there, which will be applicable for November 26 as well. Okay. Besides LVC, we also go with LVRCs also, where we faculty revise important questions in those sessions. They are limited sessions, but LVCs are in detail. Okay. Saransh. Students, this is very important point, because we are just redesigning our Saransh. So you won't find the Saransh at final, but you'll find a Saransh in the tab Other NDS. When you go log into BOS Knowledge Portal, you'll find study material. You'll also find a tab for Saransh. When you click that Saransh tab, you'll find Saransh 4 tabs there: one for foundation, one for intermediate, one for final, and one for other NDS. Other booklets. If you go through other booklets, you'll find the Saransh for Indian Accounting Standard that is applicable to you. That is an old Saransh. We need some revision. We are doing that, but most of the standard, 95% Saransh, that is applicable to you. So students who are not able to find Saransh, they feel that there's for financial reporting we are not having Saransh. So let me tell you, this is there, very well there, and you can study from Saransh. This will help you as a last minute revision also. Okay. Besides Saransh, RTP, I have already mentioned, it carries new questions, so it is very necessary to practice those questions. Besides RTPs, we have suggested answers and model mock test papers. These mock test papers are very necessary when you have revised the entire syllabus, you have prepared, you have revised, then you have to appear for mock test papers every alternate day. See, it is because if you're going for both the groups, won't be possible to do every alternate day. Still, fix a timetable where you are able to attempt as many of mock test papers, because mock test papers are beneficial in many ways. It will help you for time management. It will help you for speed. It will give you an examination scenario practice it will create that examination discipline also, and it will be very necessary for those students who are not able to identify which topic is yet to be further enhanced, or your conceptual clarities to be further enhanced, or where you are, sometimes you study everything but you're not able to retain everything. This will be evaluated through appearing in mock test papers. Okay. And it will also give a good practice. As I told earlier also, one way of understanding the concepts and one way of practicing is that you do as number of questions you can practice. That helps you in understanding concepts also, sometimes which you're not able to understand through reading of theory, but at the same time it also helps you in memorizing the concept, because as number of times you do the same question or number of questions of particular standard, you are clear with the conceptual understanding of those standards. Okay. This is from where to prepare. Last minute revision should be from Saransh, RTP, suggested, and MTPs on through these sequence. Saransh gives you tabular pictorial form of presentation, a summary of all the Indias, and it will work as a last minute revision and a crisp note for every standard. Okay. How to master the art of presentation of answers. So students, answer the question which you which you know best first. So it is not necessary that in every examination question 1 is on consolidation, then you have to attempt question 1 only. 15 minutes is given as a reading time to you, and in those 15 minutes reading time, you cannot deeply read each and every question, but you can have a glance of the entire question paper. Now that 15 minutes is for both the parts. Well, earlier that 15 minutes were given only for reading the descriptive question paper, and MCQ question paper was given exactly on your time 2 p.m. But now that 15 minutes for that 50 for at 1:45, when you get the question paper, you get both the parts. You get MCQ part also, you get descriptive part also. So that 15 minutes is for both the sections which you have to. So you cannot read the entire question paper for sure, but you can have a glance to identify which topic you have prepared, and that question appears to be that you have already practiced and you are confident enough to solve that question. Take that question first. That will leave a good impression also. It will also leave a good moral boost to you. Okay. Answer on the basis of applicable position of law. So any standard, since they are amendments, so you have to answer the any Indias based on the amendments, if there are any applicable amendments, if there are any. Okay. So based on any amendments, if questions are asked, reply on the basis of the amendments only. Okay. Okay, master your presentation. Legible handwriting, it is always required, because whatever you are writing, if your examiner is not able to read, it won't be able to give marks also. So legible handwriting is very much required. Underline key points. Sometimes you are writing the answers in paragraphs, but you want to draw the attention of the examiner. So underline the key points that will draw the attention of the examiners. It will also show your confidence that you know the key significant points, and you are bringing just buying his attention. So that will be a positive sign for you. It will give an edge. Okay, box the definitions where you feel there's something you have given as an example for your giving definition of net realizable value or something carrying value or whatever. Then you can box the definitions. That will also bring draw the attention of the examiners. That will master your that your presentation will be very neat and nice. Try not to do many mess work for rough work. Just draw up a column and do the rough work there or at the end of the answer sheet. Try to be very clear, not make any messy solution, and give every working notes for every presentation. It is integral part of your solution. Okay, mastering application based questions. For application based questions, supplement competition with clear explanatory notes stating relevant provisions of the standards. Here, by saying explanatory notes, I mean working notes. Working notes means for every solution, for every main solution. For example, in CFS, you have to prepare your balance sheet. But balance sheet, the figures which are appearing in front of NCI or other equity, that has to be computed, that has been arrived by some computation, certain adjustments. So what were those adjustments that you have to show in the form of working notes? So working notes form integral part of your solution, and it carries weightage also. It carries marks. So it is very necessary that you don't skip preparing working notes. Okay. It will also show your understanding and your clarity on how you have arrived at particular figure. Why write reasoning for each, where your theoretical answer is there, give reasoning for each and item's treatment. Terminology, verbs which are used in your question is a requirement part of the question, that is also to be taken care of. For example, if it in the question it is said discuss or explain the concept, so in that case it is not the computation which is required, it is the explanation which is required. So your explanation may include computation, but it will not only be computation. So the verbs which are given in the question, it is very important, and you should cover those. You should lay proper due emphasis on those verbs. Okay. Recommend means you have to give an analytical approach. You have to say why you are recommending, give the provisions, connect with the scenario which is given in the question, and then come to the conclusion or recommendation. Where it is mentioned present, then you have to prepare it in the extracts for the financial statements, either P&L or balance sheet or cash flow statement. You have to give the extract. In case you are not giving the extract of the financial statement, you explain how it will be presented in the financial statement. It is mentioned to compute or determine, there you can give the computation. Okay. Follow the instructions. When you get the roll card or the admit card, you'll find certain instructions are also given with, besides that, your roll number. Those instructions should be read very carefully and to be followed religiously. Okay. Use only blue or black pen. That is the instruction given. When you are filling the examination form, these instructions are given at that time also. For every solution, started from the fresh page. Track progress. Trick questions you have attempted at the beginning of the answer sheet. Every question numbers are given, and whatever questions you are attempting, you have to tick it. So as and when you attempt a question, you can tick it at that time. This will help you to understand that you have not left any question, and this will also help the examiner to understand that they have not left marking any question, okay, which you have presented in your answer sheet. Okay. Next is pre-exam preparation. There are two types of preparation. One is that before examination, which you are doing it right now, and one day before examination. And one is that some tips which are given at the time, which you have to implement at the time of examination. So right now we are talking about pre-exam preparation. For pre-examination preparation, we mean few days before examination, or say 2 or 3 days, or maybe one day before your examination. Take proper rest. It is very necessary, students. If your mind is in stress now, then you won't be able to capture any new understanding or new practice, or you won't be very open and relax or calm. So it is very necessary to have a proper sleep. When you'll have an adequate sleep, your mind will be calm and your brain will be calm and cool, and you'll be able to perform better. So proper adequate sleep is very necessary. it is not one day before examination, every day. At least have 7 hours sleep. Okay. Read instructions, carefully review admit card instructions and follow them precisely. Okay, for lifestyle habits, definitely this is all you know. You all know that sound sleep, balanced diet, stay away from distractions. Stay away from distractions means social media distractions, okay, or distractions from negative thoughts. This is very difficult. Your preparations appears to be that you won't be able to perform well. Don't just listen to these negative thoughts or to these thoughts. Don't try to seep these thoughts in your mind. It will unnecessarily create an unrest, and unrest will affect your sound sleep also and your diet also. So don't just hear those negative thoughts, and also stay away from the distractions. At least for 2 months you can just detoxify yourself from this social media and concentrate on your examination. Your whole life is there to work on those social medias involved, huh? But for 2 months you can just exclude yourself, huh? Independent problem solving. See, for financial reporting paper, it is very necessary, students, that you have to do your solve the questions on your own. Don't see the answers. It is a human tendency that when we get a question and answer, we somewhere from the corner of our eye we see the answer also. But just refrain yourself and solve the questions on your own. In case you get stuck up and you just try to find out the correct solution or struggle with the solution, those struggle will you'll remember for a long time, and that will help you in understanding the conceptual clarity also, and you'll remember those struggle, and that will really improve your understanding and your analytical skill as well. In case you just see the answer at that time, you may feel that acha ab samajh mein aa gaya, but maybe at some later point of time you again forget that particular treatment. So for remembering those treatment, the one way is to do it on your own. Struggle in case you're not able to find a solution. That struggle will help you in remembering this. Okay. And this will also just build that genuine problem solving skill also, and also hold your calmness also, because after in few questions you'll feel jittery also, you'll feel nervous that you're not able to do it. After that time, sometimes you'll get hold of your nerves. Even when you're not able to solve any question, you won't be in panic situation. Okay. Okay, computational problems, tricky issues. One was sometimes we inadvertently transpose the figures. That is the common error which is there. Also, review the gist of complex computational problems rather than reworking every calculation. When you are doing the revision, it is not possible to do every calculation. What you have to do is that whatever markings you have done while doing your first round of preparation or second round of revision, just go through those just whatever you have prepared, and with that, just if you are able to understand or you remember what was the solution, where you got stuck up, is fair enough. If you're not able to just remember that, then you can solve the questions. As I told you earlier, from every standard, try to do at least 5 to 6 questions. It is the big standard, go for 7 to 9 questions. It's a small standard, go for 4 to 5 questions. But identify those 4-5 questions which cover the most of the concepts of those standards. Okay. For memorizing key provisions, I mean certain terminologies which are used in that standard, that has to be taken care of, that has to be memorized, because usage of those standards, those key terminologies in your answers in the main examination will fetch you marks. They will show your conceptual clarity. So memorize some key terminologies which are used in standards. Okay, like for India's 37, past obligation, present possible obligation, or past event, whatever it concerns, virtual certainty of the measurement, virtual certainty, all these terminologies which are there, which must be remembered or memorized. Okay. Support your answer with substantial reasoning, logic behind every calculation. Where you are required to explain it, you have to do it. Suppose a question carries 10 marks and it also carries it involves number of calculations, then you are not required to give the provision of the standard. But a question is of 5 marks and it involves only 2 to 3 calculations, then definitely you have to substantiate with the provisions of the standards, and you have to connect it logically. Okay. While preparation, just compare your solution, mark important points. Also, when you are solving the questions on your own, and when you tell your answer with the solution which is given in the study material, you find that you are not able to, your answer is not matching with the solution, then just summarize the treatment. What was the difficulty you faced? What was the mistake you have done? And categorize your mistake in two to three categories. Like, was it a silly mistake? It was a computational mistake, or was that you were not able to retain that concept, or you were able to retain the concept but made some incomplete calculation or solution. You have to summarize or categorize your mistakes under few categories and work accordingly. Okay. In case you're doing silly mistake, do good number of practice. If you're not able to retain, then go through the chapter again, brush your concepts again. In case you are able to solve it but not completely, then you have to take hold of your nervousness, and also to see where you are missing, what conceptual clarity you are missing, where you were not able to complete the solution. Okay. Path to mastery is again practice, compare, and then annotate. But this is very important to annotate. Okay. And also to focus on questions which are subsequent revisions. Amendments questions should be taken care of. Besides that, for financial reporting, it is very necessary go through the past suggested answers. That will help you in trend analysis. Which standard is more important? What is the frequency of testing that particular standard? That you'll be able to understand from your trend analysis. Okay. Okay, how to revise day before the examination, that we'll cover in the next BOS for success examination. Any queries, students? Let me have, we were having certain queries in advance. I have tried to cover it, but let me see. Okay, there were certain queries like, do presentation really matters for all questions? Okay. Gregory Joseph has asked this. Do presentation really matters? So Varsha has asked this. Yes, presentation really matters because it gives the clarity of your solution. It makes it legible also, and also examiners, you should answer to the point, and examiners value those, evaluate only those which are required, not for all the aspects we are giving. So presentation matters. Okay. However, in financial reporting, what students do is that sometimes they do working notes before and then produce their main solution. Completely okay and completely acceptable. No issues. Even you can do working notes first and then you can produce your main solution. But let me tell you, don't do it a working note, then main solution, then working note. Either follow first main solution or then working note, or first working note and then main solution, whatever way you want, but it should be one way. It should be categorized. This should not be a mess. Working note, main solution, working note, then again main solution part. No, don't do that. Huh? So that is not otherwise that is the reason we say presentation matters. How to write answers in FR and to get full marks? This was asked by Sri Ram Narasimha Gosangi. So, see, students, first mention the provisions of the standard in your own language. No need to quote the para numbers or even the standard name or title. If you don't remember, then as per the standard, you can mention as per the standard. Give the provisions which you remember in your own words, but use certain terminologies which are used in the standard as well, and then connect the provisions with the scenario, which is give facts of the scenario given in the question. And after connecting the facts of the scenario with the provision, give the conclusion. This is the way theoretical answers or the answers where you need to give the recommendations should be presented. Okay. Speed and writing skills, Manju has asked this question, speed and writing skills. And students, I have already explained, written practice always help you in increasing the speed also, and for your time management also. And your one more thing, hand and mind coordination also, for accuracy also. So it is very necessary to increase the speed and writing skills. You start from the very beginning. Right, do every practice, solve every questions by writing it in your in a pen paper mode, and do it from the day one. Okay. Okay, some questions were pattern of the questions. I had already explained you for November 2026. There's no change in descriptive pattern manner of assessment. However, there is a manner of assessment for objective type question has been changed, and that we have already discussed. Okay. Okay, how to prepare for NDAs? This Alok sir have already answered that strategically you should start preparation for asset-based standards. Start with in the NDA 16, which is property, plant, and equipment, because the provisions which are covered in NDA 16 will be also used in your NDA 38 also and NDA 40 also to some extent. So and also in 116 also. So once when you are revising, moving or progressing further, you may you feel that your certain concepts which you have studied in NA 16 that will also be revised. So plan your study accordingly. Group your standard for revision in a manner that in when you are studying one standard, you are revising the concepts for many standards as well. Okay. Okay, students, let me cover other thing in the next session, and hope you have find this session very useful and informative, and we can wind up the session. Okay. Thank you, everyone. Thank you for listening. All the best, students.